All right, so again, want to welcome everybody to this evening's webinar, this evening's presentation on the Forex market and how, I think whether you've maybe traded a little bit, maybe you haven't traded it at all, and are to some degree fearful of venturing out into a different arena, the purpose of this webinar is to educate you somewhat on the fact that there's really nothing to be scared of. In fact, there's potentially more opportunity here in the Forex market than what you may have found doing what you're doing now, or even if you're just looking to diversify a bit and add some cash flow to the portfolio. So we'll talk about all those things here as we get on into the presentation. So first things first, just our standard disclaimer, it is possible to lose money trading. And, as I usually always say with these webinars, if there's any one thing I can guarantee, it's that there will be losses along the way. Not every trade is going to work out. And quite frankly, not every trade has to work out in order to make money. Now, that's not necessarily my approach. That's not really what my trading style kind of caters to. I'm not one that has a low batting average and a high Sharpe ratio to offset that. But, again, the point is you can make money even if you have more losing trades overall. So to say that you have to win more often than lose is not entirely accurate. But in any case, just know that with trading, there is risk involved. So I think we all can agree and understand to that. All right. So what I'm going to ask you guys to do is clear your calendar for the next hour. All right. We'll talk about Forex. Like I said, I'll give you guys some information about what it is Forex entails, what it's all about, kind of the ins and outs, and also look at some trade examples that we've called recently or that I've called recently with the Forex newsletter and how traders are doing. All right, so here's just a breakdown of what we'll talk about, the 5 truths about Forex that you've probably never heard, why you should trade Forex. And like I said, this doesn't have to be exclusive, right? You don't have to exclusively trade Forex. In a sense, I don't know that you should exclusively trade any one thing. Now, of course, I mean, if it's working for you, then by all means do it. But don't limit yourself to only one thing if there is the potential to make money doing other things, especially if you can have someone like myself do most of the legwork for you. I mean, I will, as you'll see, really do pretty much all the work necessary. I will, as part of the service that I provide, give you entries, give you stops, give you targets, update you along the way. So, I mean, if you currently are trading equities, for example, you can use this service that we'll talk about as a way to really just piggyback on what I'm doing. So I'll show you about that here later on. But first, about me. I always like to know who I'm talking to, and I'm sure you guys do as well. So as far as myself, it's a picture of me with my daughter. Been trading really just over 9 years, going on 10 here now. And before I got involved with trading, I graduated from Pace University and knew what the markets have to offer. So I didn't just jump right into Forex. I actually got started with futures, and over time felt that they really didn't offer enough in terms of options, meaning that when I was trading futures, it was really specifically the index futures. So the Qs, the Nasdaq, S&P, Russell, and if they weren't moving, if there was a slower day, there really wasn't much to do. So like I said before, it kind of backed me or limited what I was really able to do as a trader. So started to work my way into ETFs, and since then really started to get more involved full steam with Forex, and that's where I've been. So I'm a member of the research department. I teach a number of the different courses that we have here at T3. So I'm very much involved with the educational process here, as well as the trading that goes on specifically with Forex. So what I'm going to do is, as I said, tell you the truth about Forex. And I want to highlight the truth because from what I can tell, there's a lot of false claims, false accusations that exist when it comes to trading Forex. Now, let me just get you guys a little bit involved here. How many of you, before I really get into this, have traded Forex before? How many of you guys have experience with Forex or not? So give me a yes or give me a no, depending on your level of experience. So get some yeses, some nos. Looks maybe a little more to the yes side than the no side, which is good. I mean, diversity is good, and I mean, you know, it kind of helps me out because those of you who are involved with Forex can confirm what I'm saying, and those of you who have not really had much involvement with Forex can be reassured that what I'm saying is true and make you more comfortable with looking to get involved with Forex. And quite frankly, guys, as you'll see, trading Forex is no different than trading anything else, whether it's equities, futures, ETFs. A chart is a chart. And that's what I'm going to show you. A lot of people do talk about the need for indicators or these subjective tools when it comes to Forex. I don't buy into that, nor do I buy into this idea that that Forex is for the professionals. But we're going to get into that here now. So the five truths that you've probably never heard, and there are more than just these, but I think these are some of the top truths that you should be aware of. Right? It can be less risky than trading stocks and options. Right? And one of the reasons for that is you can get started with far less capital in an account. So it can be less risky than trading stocks and options. Profitable strategies are often quite simple. And that's kind of the approach that I take. I mean, I'm not trying to dumb things down and make it like there isn't a level of complexity to trading. I mean, I think honestly that the hardest part of trading is what happens between our two ears, right? That is the most difficult part of trading, is controlling the emotions and dealing with the mental aspect, right? I mean, would you guys agree with that? Would you guys agree that the hardest part of trading is really the mental aspect? It's not so much understanding the charts, understanding the trend, etc. Absolutely. Of course. That is the biggest barrier that we need to overcome. And in part, the struggle is not being confident in any one single strategy or approach, right? I mean, there's the thought or idea that there's always something better out there. And that may be true on an individual basis, right? If you're trying something now that's not working, well, then that's why you're here listening to me, right? So that's the key, is finding something that works for you, and once you do, committing to it, getting confident in it, and letting it make you money, right? or how to get rid of the monkey sitting over your shoulder. And again, that comes down to being confident, not only in the method that you're trading, but also being confident in yourself, right? Believing that you will do the right thing. And that's another big barrier is not believing in yourself. I mean, honestly, besides the mental aspect, and I guess this kind of goes hand in hand, but also um, the belief in oneself that you can do this. And what you have to realize is part of the struggle that you've probably had up until this point is bouncing from one system or one method to another, never really giving anything a true chance, and trying to just combine this or take a little bit of this and take a little bit of that, and trying to put it together. And that's where things go wrong. And I mean, if I could give you an analogy, fruit. I think most people enjoy fruit, right? As most people enjoy cake. But when you combine the two together and you try to make a fruit cake, it's not so good. So that's what we have to avoid doing, is mixing ingredients to where things just go terribly wrong. And so with that, you can apply what you've learned trading other markets, assuming you've had success there, to Forex without really worrying about, is this going to be a difficult transition? Right? As I said, I've traded futures, ETFs, I've moved into Forex now, and throughout that entire process, I've used the same approach. I've applied the same techniques that have continued to prove profitable and successful. Okay. I see a question here. Can you just buy a $97 Forex robot and get rich while you sleep? Well, I mean, if it's proven to be successful over a period of time, then sure. I mean, could you go out and do that? Yeah. But these robots are looking to take advantage of things that are working right now. So, what happens when the volatility changes or when the environment begins to change, right? How successful is it then? The presidential election recently. How successful was it then? How successful was it with the Brexit? We've got the Italian referendum coming up. How successful will it be then? So there are certain things that these robots just don't account for because they take advantage of what's happening right now. I want to prepare you to be able to take advantage of what's happening regardless of the environment. How to know what to do no matter what's happening. And that's the other thing, right? That's the other part of the equation, is that you can use a robot for, maybe a certain period of time, but you're never really going to know why it works or why it doesn't work. So some people are okay with that. Some people are okay with just buying this robot and letting it do whatever it's going to do as long as it's making them money. But, some people want to know the ins and outs. And that's why, I also have a course that I teach. So, I kind of can act as your robot, so to speak, and do the legwork for you. Like I said, show you or tell you what the trades are, but I'll also show you, if you're interested, on how to make these decisions for yourself as well. The next truth with regard to Forex is that it has huge advantages over other asset classes. It has huge advantages over other asset classes, and we'll get into some of those advantages here in just a little bit. And finally, you can invest long term and stay safe. So you can invest long term and stay safe. In fact, right, let me see, I'll pull it up here. I actually wrote an article back in July about the euro. And at that time, I said The euro US dollar is poised to test the 2015 lows, right? And exactly that's exactly where we've gone. So I'm going to send this here. I'm going to send this link out to you guys. And see if it went through there. But at the time, guys, when I sent that out, right, it was, there we go. It was right around 1,000 points higher from where it is now, or 1,000 pips. So for those of you who know Forex, you'll know that 1,000 pips from where we are now, if you were trading a standard lot, right, you'd be up $10,000. Right? And this is a trade that could have originated back at the end of July, right? If you were reading what I wrote at that time and believed that what I was saying was actually possible. And I'll show you a chart of euro US dollar here in a little bit, but just know again that, I mean, going back to the end of July, I was saying that these 2015 lows were going to be tested. And like I said, that's 1,000 points higher from where we are now, which could have translated on a standard lot to $10,000 with just placing the trade, sitting, and letting it pay you. Okay? So with those truths being outlined, why should you trade Forex? It is the most liquid market in the world. And here you can see that represented based on this chart. You can see the US stock market, you can see the futures market, and the Forex market. The Forex market does $5 trillion in daily transactions. Guys, just to put that in perspective, it takes the Forex market like 3 to 4 days to transact as much business as the US economy does in a year. Just to put that in perspective. So it's a tremendous amount of money that's changing hands, tremendous amount of liquidity. Why is that relevant for you? Why is this something that I'm bringing up? Because you will be able to get into and out of trades whenever you want without the fear or concern of getting filled at that level. So if you've ever had to worry about, am I going to get filled here or am I not going to get filled here? You know, do I have to worry about slippage or things like that? It's not a concern when it comes to trading Forex. Furthermore, and this kind of goes off on a little tangent, but there's no uptick rule. So you can short at will with Forex. Now, I'm not necessarily suggesting you try and chase things as they're falling. You certainly need to have a pattern in order to make a decision to get short. But, you know, if something is down a significant amount, you don't have to worry, oh, is it down so much where I've got to wait for an uptick? No, that doesn't exist either. It's also a 24-hour market, so maybe some of you guys here are joining from different parts of the world. In fact, if I had to guess, I'd say that you probably are. I'd say that we probably have the various time zones covered. And so maybe you don't have the time, or maybe you don't want to put the time into having to be at your desk from 9:30 or really earlier if you're going to be day trading the US stock market from, you know, call it 7:30 in the morning Eastern time till, you know, well after maybe 5 o'clock. Between doing your pre-market analysis, seeing what news has happened overnight, and then, you know, trading throughout the day, and then doing your post-market routine and getting ready for the following day. I mean, that's a lot of commitment, right? So with the Forex market, you've got basically the world revolving around the Forex market, or vice versa, whatever the case may be. But the bottom line is there's constant action. There's seamless transitions from one market or exchange being traded to the next. And sometimes you even have overlap, which can add greater amounts of volatility. So here you can see the breakdown of when the various sessions are really underway. And as I said, this really caters to really all types of individuals, whether you're working some other full-time job and can't commit a tremendous amount of time to trading actively. Forex is the perfect solution, right? You could be trading part-time while working your full-time job as you transition into getting more involved with trading Forex. So, like I said, it really caters to all time zones, all types of traders. And sure, each session has its unique characteristics. But once you get to know those things, right, there's really an endless amount of opportunity that is being presented to you. And when I say opportunity, I don't necessarily mean that there's always going to be a trade to execute. But opportunity can come in a variety of different ways. You might have opportunity in the form of an actual pattern setting up and a trade being triggered. You may have opportunity in the form of something developing, right? A trade developing or setting up, which will then lead to an opportunity. So it's somewhat just semantics in what you define as an opportunity or a potential trade, potential opportunity, whatever. But the bottom line is, with this constant flow of information, there's constantly information to digest, and that information then can then be used to making money. Right? So, I mean, for example, right, we've got data that'll be coming out later this evening, just after 7 o'clock this evening. You've got the Reserve Bank of New Zealand, Governor Wheeler, speaking. That can be a catalyst for the New Zealand dollar, which can then, as a result, impact the Aussie dollar as well. Knowing this could, set you up for some opportunity if you're looking to maybe be more active. We've also got some news coming out tomorrow that can impact the Forex market. OPEC meetings, for example. You might be like, well, what does OPEC have to do with Forex? Knowing that oil can impact the Canadian dollar can, as a result, impact any Canadian dollar pair. Right? So, you got to be aware of these things. And like I said, if you don't want to have to worry about it, that's not a problem. I can worry about it for you and let you know, hey, heads up, we've got this going on or that going on, and make sure that you're staying out of trouble. You've got all your bases covered. What times do I trade? I mean, honestly, I'm always looking at charts. So I've sent alerts out around 10 o'clock in the evening. I've also sent alerts out early in the morning. Generally speaking, I am most active from, say, 8, 9 o'clock in the morning till 4 or 5 o'clock in the evening. That's when I'm most active, which is also going to coincide with the London and New York overlap, right? Eastern Standard Time, correct. But like I said, I will send alerts out at other times as well, because we are traders. And I guess in one sense, one of the disadvantages to Forex is that it is constantly moving, so it's sometimes difficult to step away from the charts. I'm sure you guys can all relate to that, but there are times where things do get slower, and let's face it, Exactly. You have to sleep at some point, and you have to get away from the screens at some point as well, just to keep your sanity. But on that note, it's funny that you say that, you have to sleep at some point. You can go to sleep comfortably with Forex because it is 24 hours. And so knowing that your stop isn't going to get gapped above or below will allow you to sleep easier. Knowing that you can have your money working for you while you sleep is definitely a comforting thought. And even if you are restless, let's say that you can't sleep because you got a trade on your mind. You wake up, you fire up the platform and take a look at what's going on, and you can get an update. If you need to update your stop loss or whatever the case may be, you can do that with peace of mind. And as I touched on as well, because you have this seamless um, transition from one session to the next, this 24-hour data just constantly coming in and being analyzed and interpreted, there's no gap. Right? Now, look, sometimes you might get a gap based on major economic news. Right? There may be a gap that takes place, but they are far less frequent than with equities. Right? So you're able to get this constant stream of data flowing in, and traders are just instantaneously interpreting that data, and you're seeing that reflection in the chart, so you don't have to worry about the gap. Am I a day trader or swing trader? Honestly, I like to think of myself as both. So meaning my primary time frame is the hourly chart. That's where I really look to take most of my signals from. But some of you might say, well, the hourly is a long time frame, especially when you think of it in terms of equities. But when you think of the fact that this is a 24-hour environment, right? When you think of this as a 24-hour environment, it bridges the gap between day and swing trading. So as I said, I like to think of myself as both. I enter on the hourly chart, but I will hold for multiple days. On average, right, I'm holding for like 2.5 days or so. Right, on average, I'll hold longer if the trade's working, if I think it can continue, if it's behaving well. But on average, I'm in trades for 2.5 days. But like I said, because you've got that steady flow, it keeps things really nice and smooth. All right. So moving on here, I'm not going to spend a ton of time here, but you also have lower costs than stocks, options, or futures. Usually there are no commissions as it's built into the spread, right? Which is, in other words, the cost to get into the trade. And on some level, this is just semantics. I mean, you could call it a commission if you want, but with most Forex brokers, they don't call it a commission. It's just the spread. And so that is the cost to getting involved, but it's much lower than equities or options or futures in cases. In addition, you do not have any of those expensive trading platform fees that you would as an equity trader, right? If you're trading equities, you obviously have platform fees along with other fees that you have to worry about, right? Those data fees as well. Those don't exist with Forex, so they go right to your bottom line. I mean, think about it from this point of view. If you totaled up how much you spend in fees, not even commissions, just fees. If you added up how much you spend a year in fees, you could save that when it comes to trading Forex. And there's no exchange fees either. So as I said, there are some significant cost savings to trading Forex that do not exist with trading other instruments. So as I alluded to earlier, right, Forex is, in a sense, an emerging market from the point of view of all the world events that are going on and how this is going to impact various currencies. So first we had Brexit, then the Trump election, right? And this caused volatility across many currencies. Obviously, the pound and the euro, the US dollar, the peso, which I actually wrote an article about as well. And that's just for these. And of course, you have the residual or the ripple effects into other currencies as well. So, it's not like these events are confined to one currency, right? There are these ripple effects across the board. And, with Trump getting elected, you also have the trade wars with Japan, which is impacting the yen. You've got FOMC and ECB rate decisions, which impact the volatility of things. As I already alluded to, you got the Italian referendum, different government shakeups that are taking place or soon to be potentially taking place that we need to be aware of. And like I already said, the possible trade war with China. So a lot of different things happening which will create opportunity. Right? Fear, greed, those are the things that we look to take advantage of as traders. Right? If we can take the emotion, our own emotion, out of the equation and focus on how other traders are interpreting this, we can make money from that, right? At the end of the day, we use the charts to make decisions, but the charts are a reflection of traders' emotion. And that's what we have to learn how to take advantage of. Right? We have to be completely objective. And if you don't have a method that's allowing you to be objective, then you're just going to continue to stumble as you try and become a successful trader. Right? So like I said earlier, you have to have confidence in the method that you're trading, but also have confidence in yourself to do it successfully. So these things, these events that have taken place and are soon to take place, they should not be viewed as scary events, at least from the point of view of opportunity. Right? These things will create opportunity for those who are prepared. Right? And it's my job to have you guys prepared. And that's what I've done with everything up until this point, and that's what I will continue to do as we move forward into the new year. Right? And I don't want you guys to miss out. Here's just one person and something they said recently. Right? They woke up to a trade that I had called the prior day on pound US dollar, and they were up 124 pips. Right? So waking up, letting your money work for you, and you're up 124 pips in the morning. And so, by the way, a pip is the smallest incremental move that any pair can make. Right? It's similar to a point. So as a Forex trader, we're looking to capture pips. Right? If, just to put this in perspective, if you were trading a standard lot, this would equate to being up just over $1,200, right? So you wake up and you're up just over $1,200 in the morning, right? This person went on to say that they're up 75% in the last month due to my teachings and what I was able to provide to them. And they're starting with $1,000 account. So, to take $1,000 account and put $750 into it within a month's time is pretty amazing. And they also sent me this screenshot just to as if I didn't believe them. They sent this to me just to I guess prove it. Not that they have to prove anything to me. They just have to prove it to themselves, and that's what we all have to do, is prove it to ourselves. All right. All right. So guys, I'm going to hand the mic over to Amber for a moment. When I come back on, I'm going to show you some trade examples that I've called recently, some things that we've gone through recently, but I want to hand the mic over to Amber here for a moment, and then I'll be back on with you guys, like I said, to go through some examples. And if you guys have any questions, anything you want to look at specifically, I would be more than happy to do that as well. All right, so before I get into that, guys, here is Amber.
Hey guys, can you hear me now? I was talking to myself. I had it muted, I think. Perfect. Hi, Andres. Yeah, so I just wanted to let you guys know of a special that we're having right now. The Forex program, especially as we've transitioned it into T3, it's been really exploding over the last few months we've had it here. You saw that tweet. That was actually one of my clients who took the course and started following the newsletter just a few months ago, about a month and a half ago, and he's had tremendous results. I've had the best feedback from a new course coming into T3 from the Forex program. As he said, there's a lot of new leadership happening in the world. There seems to be a new feel for the more relatable type government officials, not just in Brexit and Donald Trump, but there's been multiple elections around the world. So we intend for it to have a huge impact on Forex, and that's exactly what Kurt sees coming up for 2017. So it'd be a great time for you to, if you're not a Forex trader, to get into this new market, even supplementing what you may already be doing in the stock market by having these other opportunities all around the clock. It is cheap to trade. You don't have to worry about fills because of the liquidity. You don't have to worry about gaps because it's a 24-hour market. You can use very simple technical analysis strategies that Kurt teaches in his 5-day lab. So whether you want to just follow him as Mernz was doing in the calls that he's making in the newsletter every day, or whether you want to learn his strategies and then follow along in the newsletter to have that extra edge in your entry, we have two options for you. So option one would be to buy two, get one free. So just dedicating 3 months to it. Normally the newsletter is $75 per month, but you can get 3 months for $150. Or option two is if you wanted to take his lab that starts next Monday. It's from 9 a.m. to 12 p.m. Eastern Time, Monday through Friday, December 5th through the 9th. Normally this comes with 6 months of the newsletter included, but you will get not only an additional 6 months, so you get a year for free, but you'll also get 30% off with the Cyber Monday sale that we have extended through the week. So, and instead of $9.95 for 6 months in the lab, you'll get it for $6.96, which is even cheaper than just getting a year by itself. You also will get the lab recording, which you can refer to at any time. You get the course manual, which is yours to keep and refer to back at any time. And if you are a member of the newsletter, whether you take option 1 or option 2, Kurt also has a specific webinar meetup group just for those subscribers that he holds on the first Wednesday of every month. You can ask questions, go over the portfolio. Maybe you're looking at different trades and you want his opinion on it. Maybe you just have questions following up from the course. Whatever it is, you have an hour to an hour and a half access to Kurt once a month live just for subscribers, in addition to you know, obviously the email communication that you'd have. So like I said, if you'd like to take advantage of either of these options, option 1, 3 months for $150, or if you'd like to take the lab and get a year of the newsletter for $696.50, just email in info at t3live.com and put in the subject either option 1 or option 2. You can also type in the email, you know, 3 months for $150, the lab offer, whatever it is you choose. But email in tonight. Again, we are using the 30% off for the lab, but we are also extending you an additional 6 months of the newsletter with option 2. So that is something that, you know, isn't normally included in that Cyber Monday sale. So again, info at t3live.com. Just let us know option 1 or option 2 tonight, and we'll make sure you get in. The lab is next week. We do want to get your course manual to you. Make sure that you're fully prepared for that. So we are closing registration soon. So please let us know if you'd like to attend. See if there's a question here. Yes, I mentioned that before. It's December 5th through the 9th, so it's a Monday through Friday, 9 a.m. to noon Eastern. If you cannot attend, it will be recorded for you, so have access to that. Even previous labs, if you enrolled tonight, even tonight you can go through the last lab that he held, go through it on your own time, prepare for next week, and have some questions for him when you show up. So make sure that access is available to you right away. Yes, Calvin, the lab is recorded, and that's made available to you immediately. And then even after the lab, that week's lab, by Monday or Tuesday, you'll have that on your account as well. So it's good to have, even if you enroll, having those different recordings at different periods of the year, where it might be more active, where market conditions could change. It's another huge benefit of having the monthly session, is always applying what you learn to the current market condition. So having that follow-up, having that, you know, repetitive course retakes, having the monthly sessions is definitely going to help you as you're applying it. So again, info at t3live.com. I know Kurt was going to go over a couple other things for you. So we'll be here waiting for your emails, waiting for your calls. If you have any other questions, you can also let us know that. I just have a few questions and I'd like to go over it with you. We'd be more than happy to talk to you about it. So please, we'd love to have you in this new up-and-coming program, and hopefully we'll be seeing some tweets from you as well. So that's it for me. If you have any questions, I can field them as Kurt goes through the presentation. I don't want to hold you up much longer. So Kurt, if you're ready, I'll hand it back to you.
All right, guys, I am back. Can you hear me? Just want to make sure you guys can still hear me. And I just threw my screen back up, so you should see some charts, or at least a chart here right now. So like I said, I want to show you some of the recent trades. I mean, if you guys have questions, I'd be more than happy to look at that as well. But real quick, just to show you, I mean, I had written that article, I posted in there about the Euro US dollar, and let me just pull up a weekly, because that really is where my whole thought process was coming from. And basically, right, we had a move up throughout June, July, August even, and it tested this resistance up here. Right? Overall, we're in a downtrend. So basically, I'm looking at this and saying, okay, well, the overall trend is down. We're going sideways. These lows are well within reach. And that's exactly where we've gone. So not only did I write an article in July about this happening. I wrote it again in August and again reiterated it in September that we were headed to these lows. Um, and, this is regardless of the election and what was going on. I mean, look, uh, I'm a big believer in the fact that these lightning rod stories, right, uh, they obviously are good for ratings. So you hear a ton about it in the media. But outside of that, you look at Brexit too. And all these things ended up doing was driving price in the direction they were headed anyway. Now again, yeah, you had that extra volatility on the day or two following or in the days following, but ultimately price did nothing more than go in the direction that it was already going in. And you can take this back to even the Brexit. So I'll bring up pound US dollar, right? Trend is down. This is a weekly chart. The trend is down. Here's the Brexit week where you have this big, large outside range candle. So yeah, you had the initial spike and then it came back down and just resumed what it was already doing. So if we can, look past these one-off short-term events, the longer impact really is just continuing the direction of the trend. And I mean, you could even look at the Mexican peso. Because the same thing here. Everybody's talking about how the Mexican peso is going to get devalued against the dollar if Trump is president, but that's been happening since really the end of 2014, right? At the end of 2014, it was hovering, right around 13 and a half. US dollar, Mexican peso was right around 13 and a half. And up until Trump was elected, it went from right around 13 and a half to a high of just under 20. So, I mean, it's somewhat comical to start hearing about, putting it on Trump. And look, I'm not looking to get into any political conversations here. I'm just saying this is what the chart was telling us. It had been trending higher for all of 2015, all of 2016, and so it really had nothing to do with the election. It was just, I guess, now people were starting to pay attention to it, whatever the case is. But you can see by just following the trend, you don't need anything else, news or otherwise. Like I said, the news, yes, will accelerate things, but it really just generally will accelerate in the direction of the trend overall. So anyway, those were some of the noteworthy news stories of this past year. And as you can see, if you really take the emotion out of it and just look at things objectively, there's opportunity to be made and just following the trend. All right, so let me get to some recent trade examples. So what I want to first do is just show you here. This is one going back to November 21st, right? You can see here November 21st, and there were actually several trades that were called. Now, I do not believe at the time, I'd have to go back and really look, but I don't believe at the time this pound Canadian dollar had triggered, if memory serves me right. This did not trigger. The euro yen and euro Aussie dollar trades did both trigger. And interestingly enough, the euro yen was a long and the euro Aussie dollar was a short. So this is, and you guys can see this, right? You guys can see this little screenshot of the alerts. I just want to make sure that you guys have that. All right. So this is, and the reason I want to make sure is because this is an actual screenshot from the alert that went out, right? So this is like the email that you would receive. Now, I don't necessarily always have multiple setups that are called at the same time. Um, some of them, look, I try and give you as much heads up as I can. I don't want to necessarily send out a call that is probably going to trigger within the next minute or two. Sometimes that unavoidably will happen, but it's my goal to try and give you enough heads up so that you can comfortably take your time, look at the trade that I'm proposing, and have enough time to set things up, set up the trade, the entry, the stop, the target, etc. But this is what you're going to get. Right? I'm going to give you the symbol. I'm going to give you the entry, the stop, the target. In this case, was to be determined because it had the potential to really move for us. There are times where I will give you a target, but like I said, all the guesswork is going to be taken out. You're going to have exact. I'm not going to say look to get in this area with a stop around here, and this way, I can try and tiptoe around or finagle things in a way that works out best for results, right? That's not what I'm about. So this is, like I said, a sample of what you'd get. So let me just see. Basic question. What is, yeah, so the GBPCAD is the pound and Canadian dollar. So it's not that it's worth more than the Canadian dollar. That's just the symbol. So you're trading the pound against the Canadian dollar. If you're taking it long, as was suggested here, what it means is you believe the pound is going to increase in value against the Canadian dollar. So you're expecting the pound to rise in value, or in other words, you're looking for the Canadian dollar to decrease in value against the pound. Right, that's what that means. Right. So let me go back to the chart here, and we'll pull up the euro yen. And let's see here. So this is the weekly. Let me go to the hourly chart. And so the trade, right, the trade was initially called on the 21st. So I was looking to play it. I said it had been holding near the top of the range and is looking like it's ready to break out. Okay, so the entry was going to be over 118, which is basically over the top of this area. The trade actually didn't trigger until the following day. It actually didn't trigger until it broke out over here. So it took some time, and I said, look, it's not doing anything wrong. We're leaving the trade on. If it triggers here, great. So it triggered, and it did initially pull back, but let me just show you here again. Right? The stop was at 117.62. All right. So 117.62 is right down here. Right. So that's around where the stop was. Right. Got close, but then held, turned, and took off. And I took profit on the way up. Let me just show you what we did here. Just got to pull up the alert here for you guys to see. All right, so there. As noted earlier, euro yen is moving nicely. I'm going to sell half here at 118.65. So I'm telling you where I'm doing this. And then we adjusted the stop to 118.28. So you see, I'm going to manage it for you as things work out in our favor. And so this was sent on November 23rd. Like I said, the initial call came out on the 21st. It didn't trigger until the 22nd, and here we are now managing the position as it's moving for us. And then there was another alert that went out exiting the balance at 118.70. So basically what I started to do was trail it, and I got taken out at 118.70, which was right in this area here as it ran up with momentum. And as you can see, it pulled back, gave another opportunity to have played it long here, and then again here. So that was a nice trade for us. Let me see. My primary time frame is the hourly chart. So that's where I look to take most of my signals from. There are times where I may drill down to a 15-minute chart, but most of the signals are going to come off of the hourly, and I will manage it from that hourly time frame as well. The hourly, to me, it gives me, in my opinion, it gives me the best of both worlds. It's not such a short-term time frame that I have to really be sitting in front of the screen dedicated to the chair, but it's not long enough to where, you know, I have to wait for the daily time frame to set up and then have to manage it from the daily. So the hourly blends those two together in a way that just, in my opinion, works. So the first symbol always determines whether you're long or short in reference to the second pair. Right, exactly. So if it was, let's just say, New Zealand dollar, US dollar, right? Let's just say. So if you're going long this pair, you're going long the New Zealand dollar and short, in a sense, the US dollar, which today would have worked out quite nicely. In fact, I sent an alert this morning saying that I like this as a long idea. I didn't buy the breakout. What I wanted to do was let it break out first and then see how it would behave. So, I mean, this is going sideways here now. As I said at the start or near the beginning of this presentation, we've got Governor Wheeler speaking, so that could create additional volatility. So I'm not really looking to buy a breakout here at this time of day based on that, but this would be something to continue watching for opportunity, right? What indicators? I really don't use any indicators. I mean, you see here I've got the 8 and the 21 exponential moving average, but outside of that, you know, I really don't use any indicators. I have a daily open line that I use just to show me where the day started, because that can be viewed as support or resistance depending on where we are in relation to it. But look, this is as complicated as it needs to be when making decisions. You don't need anything else. Right? Most people might say, yeah, you need this, you need that, and if you're not looking at this, you're not going to see the whole picture. In my opinion, all those things do is cloud the water, right? It distorts your judgment. At the end of the day, the only thing that matters is fear and greed, human emotion. Being able to professionally read the trend and then see the levels, the key levels of support and resistance, know where to enter, know where to put your stop, know where to set targets. That's it. So you don't need all these fancy indicators, right? Quite frankly, guys, indicators in many regards are simply used to make a profit. Right? People make these trend following indicators that they try and sell, or whatever else it may be that they're trying to sell to profit from, but all you need is the chart. You don't need anything else. And that's my belief. How many newsletters do you send in, or how many alerts do you send in a month? You know, it really varies. What I can tell you is you will get a morning report rounding up all of the US dollar pairs. So I'll go through each one of those with some analysis in the morning. You'll get that every morning. At the end of every week on Friday, you'll get a video update. So this way we'll recap what took place during the week. We'll look ahead, and that'll be a video sent to you via email. And like I said, you'll also get various email alerts throughout the day. Sometimes just saying, "Hey, we've got this news event coming up," or "Hey, we're updating this trade," or "Here's a new opportunity." So, I mean, I would say on average you can expect around 3 to 5 alerts per day. Can you repeat the course with me? I would tell you to talk to a counselor. I mean, we do record it, and I do believe you are sent that recording as well. Um, but if you email info@T3 Live, they can give you all the details as far as the course, the newsletter. So again, if anybody's interested in the special offer that Amber made, I believe it was 3 months for $150, which, you know, if you remember back to that tweet that I showed you, um, that one trade on pound US dollar was up 124 pips. That one trade would have covered the cost of 3 months of the newsletter. I mean, it really basically would have covered it. So in one trade, you can have the cost basically just put back in your pocket, and everything else going forward is just icing on the cake, right? So anyway, let me. I think I got those questions. What time frame do you usually exit on? Usually it'll be off the hourly chart. Usually I will exit off of the hourly as well. Um, do you immediately put your stop loss in after the trade is executed? Yes. So once the trade is triggered, my stop loss goes in. Look, I'm not worried about people trying to hunt my stop. I don't buy into that. And, look, part of it is because I don't play stops based on a percentage amount. I play stops based on technical levels. So where I'm putting my stop, if it's going to get hit, it's for a damn good reason, and I don't want to be in the trade anymore, right? I put my stops in locations where the reason for originally placing the trade no longer exists. So, in other words, if I get long, my stop's going to go on the other side of support to where if it gets hit, it's because the trend is beginning to change. I'm not putting it somewhere in the middle of support where it could easily pull back, hit my stop, and then take off in the direction I thought it would go anyway. Which is kind of, speaking of, look, I'm not going to sit here and tell you I have winning trades all the time, but I did take Euro US dollar short right in here yesterday, right? I shorted it right here in this area, and I had my stop loss set right up here around, I think it was 1.0620. As you can see, it came up, clipped me, and then moved in my favor as I expected it would. So that was a little frustrating, but look, I do have trades that get stopped out. I'm not saying that I'm perfect, and if, there's no such thing as perfection when it comes to trading, but it's not about being right every time. It's about finding something that you can be consistent with, that is proven to make money over the long term. And like I said, I mean that one individual is up 75% over the last month just following what my teachings have been. And that's on $1,000 account, so it's not like you have to have a ton of money in an account in order to see any kind of significant return. Starting with $1,000 at the beginning of the month, if you could turn that into $1,750 by the end of the month, I mean, just think of this scalability there. And look, not every month is going to be that much, but if that's even in the realm of possibility, you've got to get excited about that. Um, the other trade that I had put in, and I'm going to show you a snapshot of this alert as well, because remember I had also called the Euro Aussie dollar as a short, and sometimes time permitting, what I will also do is give you a snapshot of the trade and how it's played out. Sometimes I'll give you a snapshot of the trade as it's set up. Right? In this case, we shorted here up at this first line, right? And then took the profit down here at our target. Right? So this is not some kind of arbitrary level. This is where our take profit level was set for an 82 pip gain. Right now, why was the target here? Because it's right at support. Right? You look to the left, you've got that support area there. That's where I was looking for it to move down into, and that's where it went. The win-loss ratio is right around at the present moment. Obviously, it may fluctuate depending on how things are going, but at the present moment, it is at, let me just double check it here, 67%. So my batting average is 67% as of today. What broker do you recommend? I just want to see something here. Okay, so sorry. As far as broker, I mean T3. I would recommend T3. They can open Forex accounts for you, cleared through gain, which is honestly, I mean, if we go back to 2015, there was the whole FXCM uh, debacle where they almost went belly up and had to be bailed out. There were others which actually did. Gain was the one that was, I guess, ahead of the curve, so to speak, and was completely unimpacted by it. So they're the ones that trades get cleared through. I recommend T3. See some other questions. And guys, if you have questions, also you can email into info at T3 Live regarding the course or the newsletter. Risk reward. I mean, honestly, as far as risk reward goes, I don't place trades with a predefined amount that I have to make. So in other words, I don't necessarily look for 2-to-1 reward to risk. If I'm taking the trade, it's because it has room to go. And look, I want to take big targets. My average winner is around 76 to 80 pips. Um, some of them can go for more, some of them can go for less, but I'm looking to get some of those bigger trends that can really go in our favor. Do you usually choose the pairs? No, it's not really based on news. I mean, I have 24 pairs that I look at, and I just scan through them throughout the day, looking to see where the opportunity is based on the patterns that I teach in the course. So that's where the decision to go long or short any one particular pair comes in. The average loser is around 50 pips. Uh, you know, honestly, as far as the alerts at any time, as someone said earlier, we do have to go to sleep at times. So the most active period is going to be, like I said, from around 8, 9 in the morning till 4 or 5 o'clock in the evening. That's going to be the most active time. If I am in front of the screen, if I see opportunity at, say, 10, 11 o'clock at night, then yeah, I will absolutely send an alert out so that you can take advantage of it. Sam, this is actually a service that just started, so we don't have a full year. But what I can say is that of the winners going back to the beginning of when this started, which actually it started, believe it or not, um, we kicked it off in September. So it's really like, what, 2.5 months new? And in that short period of time, the winners have been almost 2,000 pips. And this is the same method that I've used in other markets as well. So, it doesn't matter what you're trading. As far as the duration of a trade, usually on average it's about 2.5 days or so. Some obviously longer than others based on volatility, if it's moving in our favor, whatnot. But on average, like I said, about 2.5 days. Um, are there different rules? No, I mean for trading Forex, you can place your orders whenever you want. I believe the minimum is 2,500 for the capital to open the Forex account. So as you guys can see, we've got those two options for you. If anybody is interested in either of the two options, you can email info@t3live.com. Right, you can open an account with as little as $100 if you're, just looking to go to any broker. But as far as T3, I do believe it is 2,500. And look, I didn't even talk about leverage, but leverage is something you can get excessive amounts of with Forex. If you look to open an account with $100, that can be gone in the matter of moments. So while, yes, you can open an account with as little as $100, I do not necessarily recommend you do that. Because like I said, I mean, that can be gone in an instant. So guys, do you have any other questions for me? Anything else you'd like to ask? As you can see, I mean, I'm definitely an open book. Um, I will share with you guys. You ask me a question, I'm more than happy to answer it. You can see how the alerts are presented to you, exact entry stops, targets, etc. FX prop account, I do not believe at this point in time it is available, but I do believe it is something that we are working towards being able to offer. Uh, how fast do you need to place orders after the alerts are sent? I mean, you don't have to place them fast at all. I mean, I guess you have to place them as at least before it triggers. And like I said, I try and give you as much time to get into the trades as I can. Some happen more quickly than others, but I mean, you don't have to rush into it by any stretch of the imagination. How many trades on at any one time? I mean, I would say at any one time, 3 to 4 at the most. Because look, if you start going more than that, you could start getting into more or less hedged type of positions where, as one moves up, the other moves down, and they start to offset one another. Right, so I will put a buy stop or sell stop in, right? I'm not looking to enter something as it's falling, right? I'm not going to put like a limit order as it's falling. So I'm going to say, when I send out an alert, I'm going to basically say, look to buy it at this level, which will be at a higher point. So you're going to enter with a buy stop or a sell stop for entry. I do not discuss futures, no. That said, the education that I teach and the approach that I take can be applied successfully to futures. Correlation in what sense? Right? What do you mean? What do I do with correlation? So like two pairs that will move similarly to one another? Right, okay, yeah, exactly. That's what I thought. So, I mean, I will look to see which one is showing greater strength or weakness, which one has the cleaner pattern, which is displaying the better action overall, and I will look to play that one. So, I won't necessarily look to quote unquote double up on a trade, so euro US dollar and pound US dollar, for example. I won't look to necessarily take both of them. If they both are giving me good patterns, though, then I will. But generally, I will look to, like I said, just go with the one that's displaying the better overall pattern. Is the list of pairs you use available? Yeah, I can send it to you in an email, or if you just want to email info@t3live.com, they can get it to you as well. The next course, I don't think I'm doing another webinar before the course. The course is coming up December 5th through the 9th. I will not be doing another webinar. This is the last one before the course. The So as far as the monthly session, we talk about what's gone on recently. We talk about trades that we either have open or maybe recently closed out. Anything you guys want to talk about as well. So it's really just an open session about what's gone on, what we're looking at moving forward, any trades that are materializing, concepts that you may be struggling with. What does the lab covers? Honestly, I think instead of me getting into it, I think the best thing to do, and this really is an open invitation to anyone, if you email info@t3live.com, they can get you the full table of contents so that you can see what's covered. But I mean, we talk about how to analyze the trend using what really matters, which is price pivots. We talk about exact entry and exit strategies for long and short. We talk about climactic setups. We talk about multiple time frame analysis, money management, trading plan, trading discipline discussions. I mean, really, we talk about everything you would need to know, even just the basics into Forex if you're fairly new. We talk about the correlations that somebody was asking about earlier. You know, knowing that the euro US dollar and pound US dollar may have similar movement is important. Knowing that oil is tied to the Canadian dollar is important. So we talk about those things as well. All right, guys. So looks like that's it as far as the questions. So unless you guys have anything else you would like to ask, I'd be happy to do that for you. Otherwise, I hope you guys have enjoyed today's webinar, and hopefully take that next step and join the community here that I've started, and will continue to grow. What if you miss a day? Well, yeah, exactly. I see Amber answered the question. We record each of the days, so if you miss a session, we'll just send it to you, which will happen either way. You're going to get it whether you're there or not. So not to worry if you can't make it. And then, of course, we can always follow up in those monthly coaching sessions. All right, guys. Thank you, Andres. Appreciate that. Success together, right? So, all right, looks like that's it, guys. So, again, I want to thank everybody for joining and emailing in to info@t3live.com. It's been my pleasure. And, like I said, hopefully I will be talking to you guys here soon, whether in the course or our upcoming sessions together. I look forward to creating a long-lasting relationship with you guys. All right, so have a great evening and enjoy the rest of your day.